We live, we live, we live. What's going on, family? What's going on? Welcome back. This is lesson number 5. Well, lesson number 4, part 2. With the continuation of hit them with the OEE, right? Optimal elite entries, being able to identify that elite, bang, bang, sniper entry, right? So, with that being said, let's get started. So, we want to remember, right? Extra confirmation was going over the fib, right? Extra confirmation was going over the fib. So with the extra confirmation, it allowed us to see how we can understand, retracements, potential reversals, right? Identifying that if we're looking for an uptrend, we measure with the fib from low to high, right? Looking for a downtrend, we measure with the fib from high to low, right? Looking for the continuation. So now tonight, we're going to be going over something that not many people talk about. A lot of people really do not talk about this because this is a certain perspective that allows you to understand that this is just a game, right? Another, system that operates in a way to help you generate anything that you want. So you need to understand something that with everything I already showed you, you can just use that alone and be consistently profitable every week. But now what I'm about to show you is to help you understand how you can be consistently profitable every day, right? Consistently profitable every day, looking for nice low risk, high reward trade setups, right? So here is what we call the Asian range, trading the Asian range. So there are 6 identifiable patterns to trade and profit from within coming out of the Asian range. So the Asian range high and low is set between 5 p.m. Eastern because 5 p.m. Eastern is when the new daily candle starts. Right, 5 p.m. Eastern to 12 a.m. Eastern. Right, because we need to understand the sessions. Sydney session opens up at 5 p.m. So the new daily candle starts at 5 p.m. So when you think about it, it's already the morning time. It's already the next day, right? It's already Monday in Australia when it's still Sunday for us here in the US. So we need to understand that. And so when it comes to the Asian range, you block the Asian range off, right, from between the times of 5 p.m. and 12 a.m., right? And we're looking for one of these 6 setups to happen between 1 and 4 a.m. and 7 to 10 a.m. So what I'm saying is if you don't see one of these moves play out between 1 and 4, you can get back up, right, during New York session, right? So the reason why I say 1 to 4, here's why. Asian session closes at Asian session, right? Sydney session opens up at 5, right? Sydney session closes at 1, right? Tokyo session closes at 3. So these are major, opening and closings because this is when the transfer of money is happening. So that's when major moves are happening. The opening and closing of these sessions. London session opens up at 3. New York session opens up at 8 in the morning. Right? These are all Eastern times. So once again, when it comes to trading the Asian range, we are specifically looking for one of these 6 moves coming out of the Asian range. So now, with everything that we've learned, this helps us, number one, clean up our charts. Number two, heighten our awareness for price action and market anatomy, being able to basically be the market, be one with the market, right? So, play number one, we have the accumulation, right? Set the high and the low. And we have a run on the stops to the high. So we have a stop hunt high, and then we have a run to the low. So you will see a move like this in a downtrend because obviously, as we can see, the market pushed down, right? Market pushed down. So in this specific scenario, we are looking for a sell opportunity. Anytime that we run highs, we look for sells. Anytime we run lows, we look for buys, right? Because that is the run on liquidity. That is the run on the stops. Hence the name stop hunt, right? Hence the phrase stop hunt. So it allows us to understand that this move happened between, right? So this is the 15-minute chart, right? We want to take entries on the 15 and 5-minute, but we're tracking the 15-minute for candle closings and wick rejections. So the ending of this box starts at the first 15-minute candle of 1 a.m. Right? So 4 15-minute candles makes up an hour. So we have 1 o'clock right here, 2 o'clock right here, runs the high, right? Traps price, traps all the buyers, right? Pin to the top, right? Harami pattern, right? 3 white soldiers. So now we close back inside and we make a move lower, given a retest. So all of this happened between 2 and 4 in the morning. So this is 2, 3, opening of London, 4, right? Targets, we're going for 50 pips plus. So our first target is always 50 pips. Like I said in the beginning, right? In lesson 1, we're always targeting 50 pips. Always targeting 50 pips. And then once we get our 50 pip target, stop losses move to either break even or 10 pips in profit, right? 10 pips in profit, make it a risk-free trade. And then we carry out and look for more entries when we wake up from New York session. New York session is right here where they made the double top, right? 2 stops to the high, right? We have a slight imbalance right here and continued down to the low. And this is GBP USD that we're looking at right now. So GBP USD easily with this one move moved over 100 pips. So we need to understand that 50 pips is a guarantee. So that's play number 1. Play number 2, accumulate, stop hunt to the low, give us the W, right? So they gave us a slight M over here, right? Gave us the W over here. We got a railroad, right? Railroad pins to the low, right? Morning star pattern, down move, doji, up, continue, right? 3 crows, up move. And we're targeting 50 pips, stop losses in profit, take partials, right? And we're always doubling up. So we're twin trading. We're always doubling up. So you need to understand something with identifying these setups, along with doing a top-down analysis, you will understand how powerful these concepts are, right? You will understand how powerful these concepts are. So that's play number one and play number two. Play number three, accumulate, right? Always understand the Asian range is the accumulation. And you will always find your best low, little to no drawdown setups. Literally like having a 10, 15 pip stop loss. Literally, right? You will find these setups between the times that I've shown you. 1 to 4, 7 to 10. Let the Asian range set up. If you want to trade the Asian range, then you need to, once again, just, if that's the best time for you to trade, then you need to be on top of your stuff. 7 to 10 p.m. So we do 7 to 10 a.m., 7 to 10 p.m., 1 to 4 a.m. These are the best times to trade. Simple. These are the best times to look for the setup because as you can see, the Asian range potentially sets up the high or the low for the day to where you can potentially have, no worry on the market coming back to your entry or hitting your stop loss. But once again, you need to be on top of your trades. You need to make sure you have the right analysis. So once again, trading the angel range, these are the direct, simple directions. You trade you try to trade this any other way, it's not going to work. So, right, we have accumulation. They set the high and the low. They break the low, retest it, and continue going lower. Once again, this is a downtrend, downtrend setup, looking for a sell opportunity, selling structure, right? Remember, all of these plays are on the 15-minute, right? We break the low, accumulate, trap it, retest inside, right? Retest back at the opening of the day, right? Essentially, just regardless, retesting back at the low of the day. All right, so let's count it. 1, 2, 3, 4. This is 1 o'clock. 2 o'clock. 3 made the move, opening in London. So between 1 and 3 o'clock, that is the closing of Sydney and Tokyo sessions and the opening of London. So we got London, 3 o'clock, 4 o'clock, boom, 5 a.m., right? That's the start of the new 4-hour candle. So that would be the potential wick that's left on the 4-hour. And we just trend down, right? So 5, 6, 7, 8, boom, continue lower. So once again, it just helps you identify how you can catch a move during every session. So that's play number 3. We break below the low of Asian, retest Asian, continue going lower. 50 pips plus every single time, right? Play number 4, accumulate, set the high, set the low, realize, right? They gave us the M at the top of the trend, W at the bottom of this trend, right? We broke above, retested, and continue higher. So the opposite, right? Every play is going to be different, right? So literally, this is just the opposite. We break above, create a higher high, retest, higher low, continue going higher. Right? Play number 5. So plays number 5 and 6 are reversal trend setups. Right? These are the fake out plays. These are the plays that will have you thinking one thing, but it's really doing another. So play number 5. Play number 5 will happen at a major support where we're looking for a buy. So play number 5, we accumulate, set the high, set the low, set the high, set the low, right? Stop hunt high. 1, 2, 3, 3 swipes to the high, bang, stopped everybody out, took out all the buyers, right? So they run the high, run the low, boom, continue higher. And as you can see, into the next day, they continued that trend. And if you're paying attention, right? This is that same move that I just showed you from play number 4, right? So notice how structure can play into each other and run one of these plays or both of these plays literally back to back, right? So you're looking for buys when you see something like this. So now play number 6, we accumulate, set the low, set the high, right? Stop point low, stop point high, 3 swipes to the high, M double top formation, drop, continue going lower. So once again, it's about you training your eyes to identify. This is literally an intraday trading tactic. This is something that allows you to potentially see the whole range for the day. Basically, potentially catch the whole move of a daily candle, literally catch the whole daily candle from potentially the low to the high or the high to the low of that candle. And you potentially caught more than 100 pips. You're get, anytime you catch a big move, it's over 70 pips every time. So it's just, once again, you taking the time to apply, right? Study each lesson and 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 realize how everything blends together, right? Once again, these are just concepts for you to put together. Take your own time to go on the chart and mark it up yourself, right? Go on the chart to mark it up yourself and do what you got to do, right? So this is GU right here. Let me take these indicators off. I don't need these right now, right? Just today was able to capitalize on a buy opportunity because I understood the trend and the structure that we were in, higher highs, higher lows, right? From the 15 minute, right? This was New York session right here. Just accumulated, made some stops right here. Now, the reason for being able to, capitalize on the buy instead of looking for the sell was the main fact of there were no significant uh, candlestick pricing, right? There was no major candlestick formations to say that this is selling right now because we're clearly in buying structure, right? We're clearly in buying structure. So this was the first level rise, second, third. So when it came to looking for this setup right here, we hit a major resistance. Yes, that's why we stopped. But anytime that we look for a fast move from the high to the low, look, what do we get? Pins to the high, right? Pins to the high, closings below, major move down, right? Pins to the high, closing below, big move down. There was no big move down, right? There was no reason for them to sell. And once again, they were already in buying structure. So they literally held price after they created this high from 4:45 in the morning until they popped it at 10:15 in the morning. They should have sold off already. When the market stays at a level for too long, if we stay at a level for too long, without making any major moves. This is an invalid. This right here, do not look for sells. Do not look for sells. Like right here, major resistance, but no big moves down. There were no big moves to, give an indication of sell, sell. So once again, when it just comes to the Asian range, it allows you to understand how the market makers are trapping the market and where they can go for the potential trading day. All right, so 1 o'clock. But like I said, the range is created between 5 p.m. and 12 a.m., right? Now, I just drag my box out just so I can see how they play above and below the range because there's, plays for you to potentially execute on either side. So as you can see, even though we broke to the high already and we went low, right? We had a nice opportunity here around 9:45, 10 o'clock to catch a short position, right? Nice 40 pips. But either way, it's just understanding the trend that we were in, right? New York reversal. There's always a reversal during New York. Always. There's always a reversal. So once again, it's just realizing the type of trades, right? The type of trades you are taking when you are taking them, right? If you're not taking a stop hunt high or stop hunt low or break and close below or break and close above, listen, look, do not touch the market. Do not take no trades, right? Here's what I mean. Do not take no trades. Here's what I mean. All right, so we have this Asian range right here. Right. So here's what I mean. Notice we created high, low, we broke low, railroad, right? So major indication of bullishness. Boom, retest on this candle, right? But either way, you would have entered on the close of the bullish candle only because since this is the indication of reversal, guess what? Your stop loss is going right at the low of that candlestick. So you got a 16 pip stop loss, right? And you're definitely getting a little more than a 2-to-1 risk to reward. So we're always shooting for 50 pips, right? But once you are at least 30 pips in profit, stop loss goes straight to break even. Simple. Straight to break even, right? But now we got to understand what trend we are in. We're in a complete downtrend. So because we built our bias already, we understood that we were in a downtrend on this potential setup right here. We're below a daily trap open. So like I said, if we already did our top-down analysis and we understand the directional bias, when we look for the Asian range setup, it will tie into your top-down analysis. So because I understand that we're in a buy, we're below a major trap money zone. We got one hit right here to that level, right? We got the double top, the M formation coming back to the high and closing below, made a major move. And then boom, right? During Sydney Tokyo session, came back London session on a third hit, just like that. What do we have here? What do we have here? First of all, we have the double top formation, number one, right? We're looking for major market reversal patterns when we are looking for our entries from these major levels. Like I said, we create patterns, the market creates patterns when they are making reversals. That's why we look for M's, W's, because they create patterns. So look at that, a nice head and shoulders pattern. Nice head and shoulders pattern. So we need to stay aware of what it is that we're looking for, right? 3 hits to a major level. Within, we can honestly say this happened within a 24-hour time span at different times, right? Different sessions, more confirmation. They're just loading up the confirmations. So when it comes to potentially taking this buy right here, yes, you're not wrong for taking that buy, but you need to understand you're going against the trend. So with that being said, right, we need to always realize the range that we're in, the trend that we're in, right, and what time these certain moves are happening. So like I said, we can look, like I said, look for a move outside the range between 1 and 4. So here's how these ranges work. When we run a high, we go straight to the low of that range. That's why we're always targeting 50 plus pips, because the market will give us our 50 and then hit us with our 80 plus every time. But when the market is potentially trending and you see them make the major, pattern during the Sydney Tokyo session, it's a wrap. They're not running that high. So in this scenario, we have to stay aware that, once again, this is a valid setup, right? This is a valid setup. We're around a nice quarter level, 35,750, right? Railroad, run the low, close back above 750, retest 750. Hey, that is a golden trade. Take the setup. But we've got to remember the trend is our friend. So this was a fake double bottom that they gave us, because we got to remember they're just creating liquidity at this point. We ran some lows over here, right? And this low gave the W. Boom. Yes, it gave us a nice reversal, but once again, momentum is bearish. Monday, Tuesday, Wednesday, midweek reversal. Boom. Pop them. Fake them out. Continue to trend Thursday. All right. And then once again, fake out Fridays. So we have these terms, right? False move Monday, right? We got Tuesday. Tuesday is just Tuesday. Right? Midweek reversal Wednesday, Thursday. Right? Wednesday, Thursday. Nice little reversal. Fake out Friday. So we potentially will see the reversals happen between Wednesday, Thursday, and then Friday, right? We'll just carry it out. That's why we call it fake out Friday. Boom. Dropped it back, closed out, broke even for the week, opened up Monday, dropped them off, cleared everybody. That's why we say false move Monday. Pulled it back, and we got Tuesday, carried out the trend. And now Thursday, what do we have for today? Looks like we're creating a nice little hit to the high right now. Let's look at gold, because gold, GUR, you know, they go against the dollar, so we potentially can see some nice movements here. So once again, I just want to, keep emphasizing on the fact that we can, beat the system. We can beat the system. We will beat the system. And it's just a matter of being disciplined and applying the system, using the system against them, right? Using their system against them. So we need to stand firm, stay strong, and hopefully everybody really gained some value and really learned a lot and can take their trading to the next level with this information, because I know I have, and I'm just looking for everybody else to do the same thing. So it's a savage world. Be fearless in it. Holla at me if you need any guidance, questions. Hit me up on IG, text my phone. Let's get busy, man. Let's really get to it, because I promise you, the grass is green on the other side. Peace.